Hi everyone, happy 100k, and let's go over my bullish and bearish Elliott wave scenario here on the 1 hour chart, after which I will explain my thought process of the price action last night and how it influenced the probabilities with a few of the pictures and the text that I have over here. Now, starting with the bullish Elliott wave scenario, we count a triangle here, a 3-wave A, B, a complex C, a 3-wave zigzag in D, and then a final zigzag to the downside in a wave E. After wave E, we then see volume increasing to the upside, 1, 2, 3, 4, 5, an impulsive structure to continue the trend. If we then go to the 15-minute time frame, you can see that the highest amount of volume is in the recent move to the upside, so therefore we preferably count that as a wave 3, which then leads us to a 1, 2, 3, 4 and a wave 5. Now, the common target for a wave 4 is the 382 to the 05 area, has been touched over here, nicely in confluence with a small little 15-minute order block, and the invalidation for a wave 4 is 100k and $63. Now, after a sideways range in a wave 4, you're looking for continuation to the upside in a wave 5. The bearish scenario on the 1 hour time frame is a flat structure, a 3-wave A, a 3-wave B, and then a 5-wave C to the downside to move below the low of wave A at 90.6k. The most common flat structure is an expanding flat, and the most common target for a wave B in an expanding flat is where we are at the moment, the 1.236 to the 1.38 Fibonacci taken from the start to the end of your wave A. If price moves to the upside and touches the 1.618, then the probabilities for this scenario will significantly decrease, as that is actually not a target you want to see hit for a wave B in an expanding flat. Now, what is a bit of an issue for this scenario is the sub-degree count of your yellow wave B, this 3-wave structure here. Now, let me explain. Most commonly, a wave B in a flat is a zigzag family structure. So either an A, B, and then a wave C, or a W, X, Y double zigzag. Now, in this wave B or X, we then also need to count a 3-wave corrective structure. And this is where the struggle comes in. The only scenario for the bears that can be counted in a wave B or X is what I have here on the chart. Reason is, this move up cannot be counted as a 5-wave structure. It's not a legit diagonal. For the people that count a diagonal here, wave 4 is bigger than wave 2, but wave 5 is shorter than wave 3, which isn't allowed, so a little bit of detail. And then this move to the downside here is clearly counted as a 3-wave structure as well. So these two here are still part of a corrective structure. We can't count a wave 1, 2, and then impulse up in that case. So therefore, you see what I have here. We have a sideways W, X, and then a wave Y inside the green B or X, and then inside wave X, another W, X, Y. Now, in a little bit more detail, your W here is a running flat, 3-wave A, 3-wave B, 5-wave C, which then is a diagonal. Then you have your wave X, which of course internally is a WXY, but this YW is again 3, 3, 5 running flat, zigzag in X, and then a zigzag in Y, and then you have a final zigzag in the blue Y. Now, this means that in this scenario, you have a running flat in blue, running flat in W. And that is definitely not preferred. Running flats are rare. They are not preferred unless many of the other scenarios fail, which at the moment hasn't happened, because you would basically need to invalidate your bullish scenario. And in the bullish scenario, the 0.618 is at the moment an invalidation for your wave 4. So if you do move down and touch this dotted line here at about 100k, then that is the moment that the probabilities might slowly increase for this scenario. But even preferably, you like price to move below this low here at 98k to really significantly increase probabilities for this scenario. So this is the only legit way that we can count this structure to the upside in an a bearish flat, a 3-wave WXY or ABC, with then internally a very complex sideways structure in a WXY. right? And then inside X, another WXY. Now, as price was moving to the upside yesterday, I was sharing my thoughts here in Discord. And of course, the probabilities were already higher anyway for price to move towards the upside. But as price then starts to move to the upside, there's a couple of things that I look at which have an impact on probabilities. So I'm going to run you through a couple of these photos here in the text, and then maybe it's interesting to you, right? So first of all, price moved towards the upside, volume locally increasing, hitting our resistance box. Now for me, this box was already less relevant because of the rejection we had just below the box. And the rejection was at the range value area high, which I accidentally didn't actually check when I put the box on my chart. I only checked the range value area higher and this whole range volume profile when price was moving down. And I was like, wait, where did we reject? I had a limit short order even at the blue box here, but eventually I removed it as price was moving to the downside without me. So it wasn't relevant anymore. So I also say here, volume increasing. We had a rejection at the range value area high earlier, and bullish CVDs playing out. We still have the bigger ones left, volume increasing. So in other words, I'm interested to see if we simply push through, right? Now, and also here, probabilities haven't changed. We're still looking for price to move up. Now, as price was then moving to the upside, there's a couple of things to pay attention to with regards to previous Elliott wave scenarios. Of course, the triangle is here as well, right? But first of all, the potential for a zigzag in an ABC. Because price moved to the upside here and took out that previous high, the rejection of the value area high, wave Y and then a WXY sideways double combo in B didn't actually work anymore. So as price now moved up, we didn't go low enough for a flat in a wave Y. It's not a triangle, right? And we can't have another zigzag in a wave Y in a sideways WXY, only in a double zigzag, but that's only relevant for a flat, which is part of the scenario I shared in this video, right? So therefore this zigzag was not really of any importance anymore, and therefore I said it affects the probabilities. Now there is the potential of a triangle being finished, right? So wave C is complex, D and E can both be counted as zigzags, and then you look for price to continue towards the upside. That is also a scenario, that's the bullish scenario I shared, right? Now, in this case, this already, as mentioned in the content, had lower probabilities, but just for the sake of knowing what to look for, this here is a ABC zigzag where B was finished, and then you look for a diagonal 1, 2, and then 3, 4, 5 down. The moment wave 2 hits the 886 at 98.1k, probability significantly decrease, was already lower as explained in the content, but knowing about the 886 is just really good information. And also talking about the 886, so this was an 886 taken from this high to the low, which was then touched, and then of course wave 2 has very low probability. So in other words, you're looking for upside. But even if you take the 886 from the previous all-time high here to the low, which I'm pretty sure if you follow this channel, you did put this 886 on your chart at some point, I can imagine. We hit the 886 over here, of course, after an 886 touch. It is common to see a bit of a rejection. We didn't move all the way to the golden pocket, but we did have a little bit of a range here, and then we decided, or price decided, to move towards the upside. After an 886 touch, probabilities are very high to take out that high, which is what happened, and that's good to see. But this is why the 886 is important, and that is also why I said keep an eye on the 886. Yeah, this was about a comment. This was not really something I'm looking for here. Zigzag A, B, C with a triangle in a B. I said, you know, someone commented about it and asked a question about it in the comment section yesterday. But for this scenario, a bigger triangle to be relevant, I need a wave D to be finished before it really becomes a consideration, right? And then this is basically my text and the probabilities of this particular video, but that is exactly what we're going to talk about now. Let's first look at the CVD divergences though. Looking at the CVD divergences, all of the bullish CVD divergences here have played out with price moving to the upside and taking all the highs, which is also what we were looking for. So that is very nice. We of course also more locally had this bullish CVD divergence, and then with the recent move to the downside here, even more as well. So very nice bit of price action together with CVD, absorption of market shorts with limit long orders. Now locally on the 15-minute time frame, you can see some bearish CVD divergences here, but before I really can take bearish CVD seriously, I would need to see a change of market structure, preferably in that case hitting that 100k level to also invalidate a potential wave 4, because in a impulsive bullish trend towards the upside, CVD tends to be leading. You want preferably to see a bigger sideways range, and that is when one can take CVDs more seriously, or when you have bearish CVDs in a bullish trend, you need to actually change the trend. And with leading CVDs, I basically mean to say that price can follow the CVD line to the upside. So in other words, in a bigger trend, the bearish CVDs are not as trustworthy unless you change the local trend again and change the market structure and maybe invalidate some bullish scenarios. Now, if we then look at the news, then we don't have actually any news today, but tomorrow, Friday, December 6th, we do 2:30 p.m. Central European time and also 4 p.m. So make sure that you trade safe, as it can increase the volatility on the chart. Not that we are missing any volatility though. And if we then talk about the probabilities of these two scenarios, then the probabilities at the moment are highest for a finished triangle and then an impulse to the upside, 1, 2, 3, range in 4, and then a move up in a wave 5, taking the all-time high. And the alternative scenario is the bearish scenario, where we move to the downside in a bigger wave C. For the probabilities to increase, we at least need to hit 100k, preferably then also change the structure and fall back inside this range. I hope this video was helpful or valuable to you. Please check out the CVD indicator video, the best indicator out there in my opinion, or the Elliott Wave educational playlist to help you understand more about Elliott waves. Thanks for watching and subscribing, and I hope to see you at the next one. Bye bye.